Hey, welcome. So let's just dive right in because the way your financial reputation gets measured, it's going through one of the biggest shakeups in decades. We're talking about a huge shift from a slow, kind of clunky snapshot to what's basically a live stream of your financial health.
Seriously, think about it for a second. You know that feeling when you finally pay off a big loan and you're waiting for your credit score to catch up? It can feel like it takes forever for your good financial moves to get noticed. If that sounds familiar, you're definitely not alone, and that's exactly the problem we're going to unpack today.
I mean, this quote just hits the nail on the head, doesn't it? For years, the whole system has been operating on this massive delay, leaving everyone, borrowers, lenders, working with information that's totally stale. But you know what? That's all about to change, and it's changing fast.
Okay, so to really get a handle on where we're going, we first have to understand the system we're leaving behind. It was a system built for a totally different time, and honestly, its limitations have been holding a lot of people back.
So here's how it used to work, and for many, still does. Lenders would bundle up all their customer data, your payments, your new loans, the whole shebang, and they'd only send it to the credit bureaus once a month. This created this huge information gap. You could have paid off your entire credit card debt, but for the next 30, maybe even 45 days, anyone checking your score would see the old, higher balance. Yeah, not great if you're trying to get a mortgage, right?
The good news is, people started to notice this massive lag. Specifically, India's central bank, the Reserve Bank of India, decided it was time to hit the fast-forward button. They've mandated a huge acceleration in how all this data gets reported.
And this timeline just lays it all out perfectly. We've gone from that sluggish monthly update to fortnightly reporting in 2025, so every 2 weeks. But the real game changer is coming up on April 1st, 2026. That's when lenders will have to report data every single week. We are talking about your financial picture refreshing in almost real time.
So, faster updates? That sounds amazing, right? And it is. But this new speed is going to affect your financial life in some very direct ways. It's really a classic double-edged sword.
On the one hand, this is fantastic news if you're on top of your bills. You paid out a big debt, and your score could see a boost in just a few days, not weeks. That means getting approved for loans faster, probably at better rates. But here's the warning. The system is now way less forgiving. If you miss a payment, that negative mark also hits your report almost immediately, which could tank your score right when you need it most.
And the stakes here are really, really high. A serious mistake, like letting a payment slide for 90 days, isn't just a temporary hiccup. It's a black mark that can stick to your credit report, hurting your score for up to 7 years. In this new, faster world, avoiding those kinds of mistakes is more crucial than ever. But look, making the old system faster, that's really just the beginning. The truly radical, mind-blowing change is in what kind of data is being used. We're moving way beyond just loan payments and into a world where our everyday digital behavior can actually build our financial identity.
And this is the core problem the old system could never solve. Just look at this number, 2 billion. That's how many adults around the world are basically invisible to the traditional credit system. They can't get a loan for a small business, a home, or even an emergency, all because they don't have a formal paper trail. The old system just doesn't know what to do with them.
Now, this is where some fascinating new research comes in. This chart compares two ways of predicting who's going to repay a loan. All you need to know is that a line that curves up and to the left is better at guessing right. The dotted line, that's your traditional credit bureau score. But look at that solid line. That's a score built entirely from anonymous mobile phone data. It's not even close. The phone data is just way, way better at figuring out who's a good bet.
And this next chart is where it gets truly powerful. This breaks things down by how much financial history people have. So the higher the dot, the better the prediction. See the black dots for the old credit bureau score? As you go to the right towards people with little or no banking history, its predictive power just completely falls apart. Now look at the blue triangles. That's the phone data. It stays strong and consistent, even for the group with zero formal credit history. It's finding creditworthiness where the old system just sees nothing.
So how on earth does this work? Well, it's not about what you're saying in your texts or calls. It's about the patterns of your life. Things like, is your spending pretty consistent? Does your phone usage follow a monthly cycle that might suggest a regular salary? Do you have a stable routine between a few key places, like home and work? It can even look at social signals, like whether people in your network tend to call you back. It's basically turning the rhythm of your life into a measure of trust.
So when you put all of this together, the incredible speed of reporting and the amazing depth of this new data, it's pretty clear that the whole idea of a credit score is being rewritten from the ground up. We're talking about a completely new kind of financial DNA. And really, that's the key takeaway here. We are leaving behind a system that only ever looked in the rearview mirror, giving you this grainy, month-old photo of where you've been. In its place, we're building a dynamic, predictive, real-time profile of who you are and where you're headed. It's a fundamental shift from a score of your past to a score of your present behavior.
And that brings us to the final, and maybe the most important question. This technology has the potential to bring financial tools to billions of people who've been locked out, which could unlock incredible economic growth. But it does that by analyzing our personal data on a scale we've never seen before. So the question for all of us becomes, how do we strike the right balance? How do we build a more inclusive financial world without giving up the personal privacy that's so essential? That is the challenge and the opportunity of this new era.